Hamish Harris from Gunsynd joins us now. You've been rather quiet recently, and now a couple of announcements in quick succession. Has there been a change of focus at Gunsynd?
No, not in particular. We had a farming agreement with Metals One, which basically limited our ability to allocate capital elsewhere, because that was a £1 million deal over 18 months. So we've been a bit quieter than usual. That's no longer the case. We're no longer in that farming agreement. So that allows us to be more active than we could have been previously and look at doing other things.
So what was the reason for the termination of that farming deal?
Well, a few things. Like I said, the capital requirements in a tough market sort of became a bit restrictive for us. Now, obviously, since we entered into that transaction, the nickel market's changed dramatically due to the Chinese refineries in Indonesia. That's put a big sort of limited the upside of the nickel price. And not only that, there's sort of new opportunities that have arisen in other areas, which we think offer far more upside and with less work commitments. So we still like the Metals One project, and people tend to forget the nickel price is still higher than where they entered into it. We just believe that copper and uranium offer more upside.
Well, which brings us to your latest announcement regarding two new assets in Canada. Why Canada and why uranium and copper?
Well, we like Canada because obviously it's a tier one mining country. It's somewhere where we have decent networks. Both of our directors have done deals in Canada before. One of them is actually still invested in a lithium deal in Quebec. Gunsynd's invested in TSX companies before. Our last investment there was a TSX listed company called 1911 Gold. We invested in December at 6 cents. It's now close to, I think, 12. So we've doubled our money in under 7 or 8 months. So which is pretty impressive. Look, in the past, we didn't look too closely at Canadian assets, simply the fact that there's so many mining companies on the TSX, and we just couldn't compete there because it's their home market. That sort of changed in the last 6 to 12 months as the market conditions there for junior explorers have become dire. That's basically given us the opportunity to pick up assets for a fraction of what they would have cost previously only a few years ago, even at similar commodity prices. So in terms of copper, it's sort of a compelling story, we think, based on electrification, sort of the transmission to renewables. Obviously need the copper wiring to hook up everything. Also, electric vehicles, a big boost from AI, and another thing which people don't really talk about too much is increasing military spending. I mean, 10% of all refined copper goes into the military spending. So we think demand, like a lot of people, is likely to take off, and yet obviously supply is stagnant with few new big copper discoveries in recent years. So we think it's a compelling story for copper.
And what about these two projects in particular? What do you like about these?
Well, with one of them, with Falcon, we see the potential for having Athabasca type uranium grade, but at a far lower cost. Obviously, Athabasca Basin is very, very well known, has very high yields, but it's also very expensive. And it also, on one side of the basin, is very deep. This asset's close to another TSX company, ISO Energy, got a Mountain Lake asset, which has had intersections over 5% uranium, which is extremely high. It's also shallow compared to much of the Athabasca Basin, so your drilling cost should be a lot lower, even though nothing's cheap in that part of the world. The other asset, Bear Tweed, is on the other side of close to the Northwest Territories. It's interesting not only just because it has a non-43-101 estimate of 7 to 9 million tonnes at decent grades, but also because when they originally drilled in the 70s, they didn't assay for copper. Now there's some indications that there's copper in there, which could make a big difference. So that'd be interesting to see if we can re-drill those sites and actually see how much copper is there. Considering that the Fireweeds Mac Pass project isn't too far away, which has 50 million tonnes at similar zinc equivalent grades, and that's got a market cap of over $200 million Canadian. So that makes us think that this is pretty valuable investment and with great potential.
So what about your existing investments, like Rincon in particular?
Well, Rincon's had a big run lately. Obviously, their neighbour, WA1, has done exceptionally well with their niobium. Their market cap's, I think, over $1 billion Aussie now. Rincon has just announced they've just started drilling and they're targeting niobium and rare earths. So, they've gone from 2 cents to around 11 cents. So that's we've got big hopes and expectations for that. So hopefully they can hit something that'd be great for everyone.
Yeah, certainly would. So lots of news flow for the rest of this year then, do you think?
Yeah, absolutely. We expect to provide some constant updates on what we're doing in Canada with those two assets, on the copper and the copper, zinc, and the uranium.
So plenty to look forward to.
Yeah, let's hope so. I'm pretty confident that we'll be doing quite a bit more than we have done the last 6 months.
Well, we'll be watching. Hamish Harris, thanks very much for joining us today.
Thank you.